Ladies and gentlemen, good day and welcome to Blue Jet Healthcare Limited Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Advait Bhadekar. Thank you, and over to you, sir.
Thank you, Yusuf. Good morning and a warm welcome everyone to Q3 and 9M FY24 earnings call of Blue Jet Healthcare Limited. Please note, investor presentation and the financial results are available on the company website and the stock exchanges. Also, anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. The conference call is being recorded and the transcript along with the audio of the same will be made available on the website of the company as well as on the exchanges. Please also note that the audio of the conference call is a copyright material of Blue Jet Healthcare Limited and cannot be copied, rebroadcasted or attributed in press or media without specific and written consent of the company. From the management, we have with us today Mr. Shiven Arora, Managing Director, Mr. V.K. Singh, Chief Operating Officer, Mr. Ganesh Karupanan, Chief Financial Officer, and Mr. Sanjay Sinha, Deputy Chief Financial Officer. Now I request Mr. Ganesh, the CFO of Blue Jet Healthcare Limited, to provide you with updates on the quarter. Over to you, sir.
Good morning, everybody. Before we start with the performance of Q3, I would now request Mr. Shiven to give you a brief about Mahad incident, and then we will actually get into the performance review.
Good morning and a warm welcome to all. We are informed about this incident that took place in Mahad on the investor call dated 12th November 2023. The incident took place in Unit 3 in Mahad, and the incident was localized in a particular block. Our foremost concern was the loss of life due to the accident, which can never be compensated. Our responsibility is towards the families who had lost a member in their family, and the compensation was paid to them. Injured persons have been treated and are now discharged. We had received an order to stop production in the impacted site, that is Unit 3 from MPCB. The dismantling process of the affected area is started and will take another 6 weeks. As on today, we have received the approval to initiate the capex activities in Unit 3. Our original plan was to move the production of a raw material that we are currently importing to in-house, which remains intact in Unit 3. We expect this block to be validated by Q3 FY25. We will also add another block for multi-production as per plan. We do expect this block to be validated by Q1 FY26. We are in continuous communication with all the regulatory agencies and cooperating with them in the inquiry process. Consequent to this incident, we are revalidating the safety system to identify the gaps in all locations wherever required. Certain additional equipment and systems were installed to ensure the highest level of safety standards. We are also undertaking a complete systemic review of all safety systems, and renowned consultants are engaged to conduct the risk assessment and suggest best-in-class practices, including safety training. We have made a change in the organization by bringing in a safety senior resource with responsibility of safety of all our units. We have ensured properties of the unit. Loss assessment is being carried out and a final report is expected. As a prudence measure, we have taken property damage as a loss in the P&L and will reverse it on the admissibility of the claim by the insurer. As an important business update, I would like to highlight 2 opportunities that we were closely tracking and have touched an important milestone at a customer's end in December, such as a label expansion for the cardiovascular drug, which is an NCE molecule, and an NCE intermediate in the MRI space. These were two important credible opportunities for Blue Jet Healthcare as well. And we were doing capex in Unit 2 in the past 12 months. So this capacity build-up will be ready for validation in Q1 FY25 to meet up with the growing requirements of our customers in these two specific areas, such as the pharma intermediate space, in the CDMO business, and the contrast media. On this note, I would like to pass on to Mr. Ganesh to explain more about the financial performance.
Hi. We have uploaded our performance in our website for you to have a detailed understanding. We will be sharing certain key highlights in this business call for your assessment. We will start with sales. The 9 months of current year sale is higher by 5% compared to the previous year. During this 9 months, contrast media grew by 8%. Artificial sweetener category degrew by 33%. This is on account of dumping of products by Chinese manufacturers at a very low price, which has impacted our sales. We are still maintaining our prices, so we are actually not getting into this price war at this stage. The pharmaceutical intermediate business grew by 194% with commercialization of a high-value intermediate for API under patent till 2031 for cardiovascular therapeutic category. Company hopes to see increase in sales volume in coming quarters. This could have offset the degrowth in artificial sweetener business. During the current quarter, Q3 of FY24, the total turnover dropped by 1%. Contrast media and artificial sweetener degrew by 8% and 35% respectively, while PI grew by 250%. We would like to highlight few key events in Q3 which had an impact on our operation. We revalidated our safety systems in all the units with the support of external agencies after Mahad incident. This had an impact on the production during Q3 FY24. In addition, during Q3, the Red Sea situation contributed to longer delivery timelines for a door delivery customer with marginal increase in shipping costs. Normally what takes 35 to 40 days for delivery now is around 60 to 70 days. So this is actually having an impact on our revenue recognition for door delivery customers. We will talk about few key products in terms of performance as well as how the outlook for the next couple of quarters. Our contrast media customers for intermediate for NCE increased their offtake in the first 9 months for their supplies to the US territory. You may recall we supply intermediates to one of the NCEs. The innovator got the approval in the beginning of calendar 23, and the supplies we were able to show significant jump compared to previous year. They got the approval for marketing the same in Europe in December 23. We expect the traction in the offtake from Q2, Q3 of FY25 once the marketing effort stabilizes both in US and Europe. We also we have one more new product launch in the contrast media. We have actually shipped the validation quantity in Q3, and the product is expected to be validated in this quarter. On completion of the regulatory process at the customer end, we expect the commercial volume to start from Q2, Q3 of FY25. Now, we will also talk about the situation with our intermediate supply to the innovator, the cardiovascular space. Our innovator customer has demonstrated a sustainable growth while we have started supplies in Q2 in this financial year, we hope to see increase in sales quarter-on-quarter. An increased offtake in FY25 is planned out in our unit at Ambernath. We would have completed the investment plan in a new block by March-April of this calendar year, and the facility will be ready for validation in Q1 25. The commercialization of the increased quantity is expected from Q2 25. So this is a critical event we are actually looking out for. We would also like to give a quick update on our existing products in the contrast media space. We believe the potential for contrast media is on the rise and expect few of our customers to strategize capacity planning for the future, which may result in planned slowdown in production to debottlenecking of capacities in the short to medium term. Once the capacity planning at the customer end is addressed, we believe our customers' need for contrast media intermediate will increase in the long run. Now, moving to artificial sweetener, we decided not to drop prices in the current scenario and will be opportunistic. We will continue to stay where we are now in this category. Considering the market situation, to maintain few customers which having a consistent consumption, company may soften the price to some extent in order to regain market share. Company is also in the process of tapping new customer in Europe and US, as well as developing other forms of saccharin such as calcium saccharin. Now, moving on to profitability, if you look at the gross margin, thanks to the softening of raw material prices, for the 9 months, we are around 57.5% of gross margin. We could actually see the overall trend in raw material price easing off. As far as the operating costs are concerned, our focus on non-renewable energy sources helped us to reduce the power cost by 1%, and the favorable ocean freight for most part of the year also reduced our operating cost. Marginal increase in salaries and wages was offset by this savings. So we are able to sustain our overall operating cost at a consistent basis. During the quarter, we took an extraordinary item. The compensation paid to the families of the casualties of in excess of 3 crore has been taken as a charge to the P&L. This could be a one-time impact. The balance is on account of loss of property at Mahad. While the survey is going on, we have taken a hit in the P&L, and it will be reversed once the insurer admits this claim, which we expect somewhere in Q4 to Q1 of FY25. In terms of liquidity, as of 31st December, we have a cash and investment of 237 crore with you.
Ladies and gentlemen, thank you for patiently holding. We have the line for the management reconnected. Over to you, sir.
I think when the line got interrupted, I was talking about the capex. Our solar project got completed by December, and we were able to integrate it with the grid by January 24. We have invested close to 30 crore in this, and we do expect more than 60% of our total power requirement should come from our renewable energy source, and this could be a good amount of savings way forward. We expect our capex in Ambernath to be completed by March-April with an outlay of close to 90 to 100 crore, and as I mentioned earlier, we should be validating this facility by Q1 of FY25. We are also in the process of making our EC application for a greenfield site. We actually will be fast-tracking our investment in this new greenfield site, and we do expect traction in FY25, and the facility should be we should expect this facility by FY26. We have talked separately about Mahan investment, and currently the total outlay for this is going to be around 250 crores. But the split between FY24 and 25 will be largely dependent on when the site is ready for investment. I think today the site is still yet to be dismantled, and once we get that requisite approvals, it will be dependent on that. In terms of profit after tax, Q3 we dropped to 19%. This is predominantly because of the extraordinary item. And if you look at 9 months ended, including the extraordinary item, our PAT is around 23% compared to 21% of the previous year. We are ready for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Sanjesh Jain from ICICI Securities. Please proceed.
Yeah, good morning, sir. Thanks for taking my question. I've got a few of them. First on the new launch of an PI API, which has been highlighted in the presentation. Can you give more detail? What is this product? When is this expected to be shipped, and booking of revenue will start?
Hi, Sanjay. Good morning. This is VK Singh.
Hi, good morning, sir.
Sanjay, as you are aware that this intermediate goes for a cardiovascular end-use product to the innovator. The product is protected by a patent till 2030 and another year of marketing exclusivity. Supplies had commenced for this product in the last quarter of the previous year, and you would have seen an uptick in the performance of this third business vertical, that is the PI vertical. As we speak, the supplies are ongoing, but there is going to be a significant uptick in the volumes, and for which the new capacity that we were adding in our Unit 2, that is USFDA approved at Ambernath, that new capacity would be on stream in Q1 of FY25. That's the time when there'll be a significant uptick in the revenue from the product as well. I think there are good tidings on the market as far as the molecule is concerned. Evion, the innovator, has been granted a label updation. And with this label updation happening, the addressable market for the molecule increases manifold. We are, however, sticking to the original projections that we had discussed about and not factoring in any of this, uptick that could come from the label updation that's happened. You would have also seen that there has been an amicable settlement with Daiichi Sankyo. So I think as far as the innovator and the molecule are concerned, there is a lot of positive news.
Fair enough. So we were in the process of expanding that, and that expanded capacity will come in Q1 25, and hence we expect an uptick from Q1 25. That's the broad assumption?
Yes.
Oh, fair enough. Second, on the MRI thing, and the one which we have sent for the validation, I think MRI thing has also received European Union approval. When should that materially start contributing to the contrast media? And second question related to contrast media is on the validation quantities we have sent. When should we hear response from the customer, and when should we actually look at the commercial supplies on a regular basis?
Yes.
Starting off with the first update on the NC intermediate for the MRI space. As a company, we've been supplying the advanced intermediate from phase 3 to the customers and been a very strong partner in their overall success. We've been adding up capacities for this particular candidate, and on FY25, this plant would be validated. However, the commercial offtake should perhaps increase from Q2 FY25 for this particular NC intermediate. On the generic intermediate for the iodinated space, this was an important milestone for us as a company to supply this validation quantities. Depending on their stability studies and the time required by them, I think our best estimate would be Q2, Q3 FY25 for a significant ramp-up when it comes to this particular candidate. It can happen earlier as well, but we are being conservative when it comes to this particular outlook.
And will we be dependent on the Mahad side to come up for these product ramp-up, or we have enough capacities in Amarnath to support all this expansion?
It is safe to confirm that these two NC opportunities, both CDMO linked for contrast media and the cardiovascular space, are purely coming from Unit 2, Amarnath, and not linked to the Mahad side.
So all the three products, which is NC for MRI and the generic iodine and cardiovascular, all the three will be serviced from the existing capacity or an expanded capacity from the Unit 2 Amarnath.
Correct.
Got it. So what's your plan for Mahad in that case? Because we are incurring a large capex of 250 crores for an MPP plant. So what are the plans for Mahad, and what is the utility or an utilization we are looking for a Mahad?
So Mahad, the immediate action plan was a block for backward integration and contrast media. Fortunately, the pricing of the raw material has favored us for the company, so backward integration will happen by Q3 FY25. That is block number 1, and the other block would be a multi-purpose intermediate block for the CDMOs, the opportunities that we are tracking both in contrast media and the pharma intermediate space for different therapeutic categories such as cardiovascular, CNS, and oncology. So these are two large multi-purpose blocks that we are developing in this particular site in Unit 3.
Thanks, Shivan. Can I talk about the pipeline as well? Because I think the capex plan looks quite large. So in that context, can you help us understand what is the pipeline we are looking at or having in our R&D, which gives us the confidence and the visibility for the large capex in the Mahad?
Sanjesh, as you know, we had expanded our R&D. We had doubled the hardware, and we had also doubled the number of people. There is a pipeline for contrast media. As we have spoken in the past, 4 or 5 new opportunities are building up in contrast media. On artificial sweeteners also, we are developing a couple of new artificial sweeteners. The most interesting piece is in the PI segment, where something that was incubated about 3-4 years back has now fructified, and we see the uptick in the PI vertical business. But besides that also, we are working on 4 to 5 very significant and credible opportunities in the PI segment with client visibility. So the capex and capacity that we are putting up, I would say, already has good visibility and would very quickly get to a very decent scale of utilization.
Got it. Thank you. One last question from my side.
Just to add, as you know that the company has been built on chemistry platforms. We have added 2 or 3 new chemistry platforms as well, which will help make our pipeline more robust.
And which are these chemistries? One we were into the isopropyl, but it's nitration. Which are these chemistries?
So, for example, we have added a pyrophoric chemistry, we have added an enzymatic chemistry, and we have also commenced some work on the starting elements for proteins.
Okay. Proteins in the sense which goes into the supplements and all?
No, not that. The amino acids.
Okay.
But this is all in the inception phase, but work is on.
Got it. One last question.
Sorry to interrupt, Mr. Sanjesh. May we please request you to rejoin the question queue as there are several participants waiting for their turn.
Yeah, sure. Thanks, Kiran. Thanks for all the answers.
Thanks, Sanjesh.
Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up question, you may rejoin the queue. Next question is from the line of Bansi Desai from JP Morgan. Please go ahead.
Yeah, hi. Thank you for taking my question. So my first question is on contrast media. We've seen a sequential decline here. Is this in part due to the planned shutdown, which you mentioned, and how long do we expect this impact to be seen in the business?
So I think as a segment overall, this contrast media space is significantly. And what we learn from our customers is that there's a strong capacity expansion plan for manufacturing API at their respective geographies, which has led to an immediate softening in terms of the offtake. But when it comes to the overall growth outlook, it seems very positive in this particular segment because the overall segment is expanding quite significantly. The impact for us could be limited to Q4 of FY24. But with the new ramp-up of the NC intermediate, we could see a strong recovery starting Q1 FY25.
Okay, but despite this shutdown, there was no need, for the innovator to stock the inventory, or that has been managed with our past supplies.
It's actually managed more with our past supplies. So there are a couple of points. I think one is on the Red Sea impact. Our dispatch is also now getting impacted. Like what used to take 35-40 days, now it's taking 70 days. So you would actually see a revenue recognition challenge in Q4 because this is a door delivery consignment. So unless it reaches the destination, we cannot take it as income. So we already saw a good amount of impact in Q3. And given the Red Sea situation, I believe you would see this trend continuing in Q4. And looking at the production plans of our customers, you would actually see a softening for Q4. Probably it can extend to a part of Q1 also of next financial year.
Okay, but then the improved growth, when should one start seeing that, and I would believe that, we should be, then kind of, tracking more than what we did probably, in last 2 to 3 years in this particular segment.
Yeah, I think when we hear about the aggressive capacity expansion plans by our customers, the ramp-up is quite significant. And Q1, Q2, you will see a good recovery in this particular space.
Okay, noted. And my second question is on PI API. Shirin, you guys have, ambitious targets, of growing this segment. It is a small business as of today. I mean, last year, it contributed to 34 crores of revenues. We had, ambitions of taking this to 10-15x, in 2 to 3 years' time. A large part of that, was set to be driven by, this promising intermediate, which is the Foresterion. So do we still stand by that, does that, still remain a material contributor, in our target?
Yes, absolutely. I think with the recent approvals by the regulatory agencies and the label expansion claims that are quite evident right now, I think there is a good amount of traction in this particular molecule. But we are also tracking a few other late-stage NCEs that could be a growth driver in this particular category. I mean, we saw 250% growth in this particular vertical, and it's quite healthy. It has a low base effect, but at the same time, there's a good traction in the opportunity that we are tracking.
But sequentially, when I see, the uptick is probably not to the extent that one would have anticipated, because last quarter, I guess, we had issues on the customer side, which led to delays in validation. So is that resolved? And if that's the case, then why the ramp up has not been material?
I think the delay in the last quarter was, of course, attributed to part one would be the validation, but also for us as a company to relook at the safety systems in not only in Mahad but the other sites as well. So it was a conscious decision made by the company to maybe slow down the production, but at the same time, relooking at the safety was our utmost concern.
Okay, when you mentioned about the label expansion opportunity not factored in your numbers, so when you think about these opportunities, you mean to say, once the label expansion approval comes through this particular year, we see upsides to our forecast?
I mean, I think all I can confirm right now is that the capacity built up that we were undertaking in Unit 2 for these few NC intermediates. I think that with these positive news by the regulatory agencies, we'll be able to fulfill the capacity that were being built for FY25 and 26.
Okay, thanks. I have more questions. I'll join back with you.
Thank you. Next question is from the line of Purva Javeri from Girik Capital. Please go ahead.
Yeah, hello. Am I audible?
Yeah.
Yeah, so I wanted to ask you about the sweetener business, right? We have seen sharp moderation in the revenue. So, what is your outlook over there, and can you just explain about that?
No, can you repeat it? Your voice is a little bit muffled now.
Hello.
Yeah. Can you repeat the question?
Yeah. So I was asking you about the sharp moderation in revenue and sweetener business. So, can you just give an outlook over here?
Today, in the sweetener business, there is actually a dumping of product by China. So we actually have two categories of customers. One is a typical CDMO with FMCG clients and the spot market. Today, we are actually not focusing more on the spot market because we don't want to actually get into this prices. So as long as we have this Chinese import, the spot market is going to be a challenge. Our strategy is to focus more on the long-term CDMO customers and reserve our capacity for this. You would actually see this trend maybe for another 2 to 3 quarters. Till then, we come and replace it with another FMCG client. I think that's our long-term goal.
Okay, and I wanted to ask you another thing. Can you just give a guidance on what will be your CapEx cycle going ahead?
No, the question is not very clear. On the CapEx cycle?
Yeah, CapEx cycle.
CapEx, I think we had indicated unit-wise in our opening remarks.
Okay.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Ritika from ValueQuest. Please go ahead.
Hi, sir. Thank you for taking my question. First question is on pharma intermediate. We talked about this new intermediate for Esperon, capacity ramp up on that. Could you broadly highlight what was the capacity or peak capacity earlier? What was there with us, and how much are we increasing the capacity on this Esperon drug?
See, our capacities are fungible, so we actually we will not be sharing those information product-wise.
Sure. Sure. Second question is on CapEx plan. I know it was highlighted earlier on the greenfield as well. But broadly, up till now, Q3, what kind of CapEx have you done? What's our guidance for 24 and 25 as well, including this greenfield site?
See, for FY24, it will be around 160 crore. Because our investments in Mahad is getting pushed to FY25, and for the next financial year, we should be targeting approximately 200 to 220 crore.
Okay. So could you give us a number on what we spent for Ambernath Unit 2 for this new capacity for NC, MRI plus this Esperon? Broadly, what?
Close to 100 crores. That we mentioned it in the initial conversation. 90 to 100 crore is the number we are looking at.
Sure. Sure, sir. And lastly, on the new iodinated contrast media intermediate that we are talking about to be validated by this quarter, broadly, what would be the sense on ramp up? How big this drug could be for us? Anything that you could share with us?
So it is an established market for a very old contrast media API in the iodinated space. With quantity and volume and price have been signed off with the customer, and we have strong visibility on that front. So the ramp up could be quite aggressive from us as a company.
Sure. Thanks a lot. Yeah.
Thank you. Next question is from the line of Saurabh from Multi-Act. Please go ahead. Saurabh, your line is unmuted. Please proceed.
Hello?
Yes, please go ahead.
Yes. This is Darshan from Multi-Act. My question is on end market size of new advanced pharma intermediate that we have talked about, the validation batch that we sent in the Q3. If you could broadly highlight that.
You are talking of the pharma intermediate, right?
No, not pharma intermediate. Contrast media. Iodine-based contrast media formulation market size.
This is the generic contrast media you are talking about.
Yes.
In my assessment, this should be probably around 10% of the iodinated space. 10 to 12% of the iodinated space.
Okay, thanks. That's it from my side.
Thank you. Next question is from the line of Ganesh Nagasekar from Bharat Bet Research. Please go ahead.
Hello, sir. Yeah, so two questions from my side. The first is on the contrast media intermediates. Our clients there are fairly concentrated, so I just wanted to check if there is any intent and ability from the client to backward integrate, and if you kind of see that as a potential risk for the business. And the second is on the sweetener side of things. Just wanted to check with respect to the Chinese competition coming in. Do these guys have any kind of major cost advantage over us, or are they basically selling below cost of us? And could we change anything in our cost structure to make the product more competitive?
Yeah. So I think you are absolutely right when it comes to contrast media space that the customers are fairly concentrated to 3 or 4 global names. And some of these names rely on our abilities of backward integration. Today, in some of the select intermediates in contrast media, we have a world leadership position. To an extent, if there is a requirement and spare capacity, we can export to China. So, I think the long-term plan would be to further expand their API capacities to meet the customer needs and rely on CDMO partners like us for the intermediate requirements. And when it comes to artificial sweeteners, I think there are various benefits offered to the Chinese exporters. So I think in the short term they would have a cost advantage, but in the long term, the quality that we offer and the price, for a few select large consumers of artificial sweeteners in the oral healthcare space and beverages rely on us. So I feel that we should be seeing a good recovery when it comes to the second supplies going forward.
Understood. Thanks a lot, sir. That's it from my side.
Thank you. Participant, to ask a question, you may press star and 1. Next question is from the line of Nilesh Dutt from Burman Capital. Please proceed.
Hi, thanks for taking my question. First question is on our key contrast media molecule, 5-ABA-HCl, right? So, want to understand what percentage of the total requirement is coming from India. And if this is a significant number, what does India and also Blue Jet have to offer over China and other places that makes us more competitive in this space?
I think it's very difficult to comment on the supplier base for this particular intermediate or others as well. But at the same time, Blue Jet as a company is well positioned to supply this intermediate in the long term with this base of backward integration and also adding up another critical raw material that will be that will come up from Unit 3 Mahar. It only strengthens our position as a supplier to these innovators.
Understood. And so also I was looking at your historical numbers and I saw that in FY20 there's been a large jump in our profitability. So if you would explain, was this because of the ramp up in 5-ABA-HCl and what exactly changed in that year in terms of pricing, cost structure, etc.?
I think this particular jump was not only attributed by this particular intermediate that you referred to. I think as a company we scaled up the manufacturing operations, brought in some automation with the help of our customers, and this was a well designed plant in which we could get best in class recoveries, which we were not getting in FY19, and FY20 was the execution of a large continuous plant, semi-continuous plant for these contrast media intermediates, which resulted in a good bottom line.
All right. Lastly, for the three molecules that you have highlighted, cardio intermediate NC, MRI NC intermediate, and iodine phase generic intermediate. So, and you have mentioned that you are spending roughly 100 CR in Ambernath. Is it fair to assume that the peak revenue potential just from this 100 CR is roughly 300, assuming the gross asset turn remains the same as on today? And also, do we have customer guarantees for offtake of these molecules? I mean, some negotiated amount of X crore supplies, etc.
I think first, if you really look at our sales realization, we have the pricing is from 1x to it can even go up to 80x. So it's sometimes very difficult to actually peg an asset turnover. If you are actually making a very high value product, the asset turnover for that particular block could be significantly higher. So I would not like to standardize a turnover ratio because of this mix of low value as well as high value products what we have in our basket. I think that's it will be difficult to generalize. I think to me that's number one. Second, we get into a long-term supply agreement. I don't think we have a guarantee from the manufacturer. I think if you appreciate the pharma business, I think once a particular product is in the final output, it becomes difficult for somebody to change the source. And to me, indirectly, I would actually put that as a sort of a comfort or a guarantee. But in the industry, I don't think there is any sort of a guarantee which is given to by the customer.
Fair enough. Lastly, just one question. For the Mahar 250 CR CapEx, can you split it in the backward integration block and the new CDMO block? Just a rough guidance.
See, majority of the cost, a significant portion actually goes in the utilities, as you will appreciate in the pharmaceutical sector. Your effluent, your boiler, your substation, stores. So we are actually redoing the entire infrastructure. And there will be two additional blocks, one for a backward integration of our raw material and one is a multi-product block. So normally a production block should be in the range of 80 to 100 crores and the remaining actually goes into the utilities. So you cannot actually ignore the utility, especially when you are actually upgrading it to a larger capacity.
Understood. Thanks. I'll get back in the queue.
Thank you. Participants, to ask a question, you may press star and 1. We have our next follow-up question from the line of Bansi Desai from JP Morgan. Please go ahead.
Yeah, hi. So thanks for the opportunity. So just one question on gross margins. How should we think about, these trending? Because, sweetener business has declined for us, but then, PI, API should pick up from here. But at the same time, the backward integration plans for some of the key molecules could get delayed because of Mahar. So, given these, pushes and pulls, how should we think about the margin trend going forward?
See, with the reduction in one of our key raw material, we should be in a position to sustain the 57-58% margin, at least for a couple of quarters. I think to me that's number one. And based on the offtake of the innovator product in the PI API segment, that could be a marginal impact. So maybe in the long run, there could be a couple of percent reduction in the gross margin.
Okay, so sustainable levels should be closer to 55%, and the 57% could continue.
In the medium term, it should be around in that category, actually.
Okay. And one question on, Esperion, earlier, in the year, they did mention or they did allude that in order to improve their profitability, they could look to completely shift the manufacturing responsibility to Daiichi. Have you guys had any, sort of conversations around this, or have you received any communication on these lines from them?
I think we are not privy to any information on that, and we may not be able to share much. But what is in public domain, what they are talking about is the manufacturing of the licensed product. And by licensed product, if you will see the definition, it means the pharmaceutical product. So it's, I would say it's reasonable to assume that they are talking about the formulation.
Okay. And for this particular intermediate, we are the primary supplier, right? We have the primary supplier status.
Yeah, we are.
Okay, perfect. Thanks a lot.
Thank you. Next follow-up question is from the line of Ritika from ValueQuest. Please proceed.
Yeah, hi. Thank you for taking my question again. So, an extension of the earlier participant's question, as we are the primary supplier of this pharma intermediate, do we have enough capacity or plans in place if the formulation offtakes with a updated label expansion? Do we have enough capacity to cater to increase in sales or increase in supplies that would be required?
I think the immediate ramp up, what the customer is expecting, I think that should be an immediate milestone for us to achieve and cater to that in a timely manner. But going forward, we are in close contact with the customer needs and requirements, and our capacities will evolve as the capacities are fungible in nature and expandable.
Right. And by primary supplier, we should be thinking that 70% around or 70-80% of the demand for this intermediate should be coming to Blue Jet. Is that how we should be thinking?
Would like to paint a picture on a particular number, but as a primary and majority supplier, that should qualify us being very credible and important to the customer.
Sure. Thank you so much.
Thank you. Next follow-up question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yes, thank you. Thanks for taking my question again. I got one on the backward integration for the contrast media. Now that the prices of APD itself has fallen very sharply, going into backward integration, do you assume the benefit which we would have assumed earlier will be significantly lower due to the backward integration? How should we see it? Because I think gross margins any which ways have scaled up to 57, 58%, right?
Absolutely right. I think it's a very good question you've raised. I think the current pricing levels are similar to the FY22 levels. And in FY23, there was a significant increase in the raw material prices. However, a plan to backward integrate dates back to FY21. So the plan that has been designed will definitely beat the existing supplier, and it just gives us further stability and predictability in terms of the overall supplies to our end advanced intermediates.
Got it. Yeah. One last bit on the artificial sweetener. When do you think these revenues to stabilize, and China competition I don't think is growing very, very soon. So what's our plan exactly to see that we scale back our artificial sweetener business in the next 12 to 18 months?
Yeah, I think our efforts towards increasing the contractual revenues are ongoing, and that can happen by increasing the wallet share with the existing suppliers, but also by adding up new customers. And we have received some positive updates from a few FMCG players. So our intent, and we aspire to grow this category by not just seeing a strong recovery in the saccharine space, but by also adding up a few other sweeteners, which would be another CDMO opportunity with a large player. So we are developing some other sweeteners as well.
Is it in the saccharine itself, or will it be a different sweetener altogether?
At this point in time, it would be another sweetener altogether, but an established name.
Okay. So we are expanding the sweetener side in terms of the newer portfolio.
Yeah, because similar customer profile, and this helps us to expand into adjacencies, and this is being brought up by them only. So we are just working on the bench to further optimize the process and be more competitive before we initiate the capex.
Got it. That's it from my side, and thanks again for taking my question.
Okay.
Thank you. Next follow-up question is from the line of Nitesh Dutt from Burman Capital. Please proceed.
Just one question. You mentioned that gross margins over a longer term should see a couple of points reduction, like 55% is a sustainable level. At the same time, we are doing backward integration as well. So just want to understand why you feel that gross margins will come down in the longer term.
I think the prediction right now is fairly conservative. I think we want, firstly, the capex that we're doing for backward integration to stabilize. The catch-up could be aggressive as well, but at the same time, the estimates given by Mr. Ganesh would be true and correct at this point in time.
All right.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for the closing comments.
Thank you very much for your participation. We will see you in the next investor call for Q4. Thank you.
Thank you.
Thank you. On behalf of Blue Jet Healthcare Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.